Okay, we're going to talk about how to trade options strategically through earnings season. And earnings season happens 4 times a year, so this is going to be an important lesson, and we'll walk you through exactly how to trade options strategically with a couple examples and two of them to keep an eye on going after the event. So a lot of times those that have started with options, including myself, have bought options into an earnings event only to see that option implode and that money that you paid now is a loss, even though maybe the reaction of that earnings event was higher. So, understanding what we talk about, or what I specifically talk about, is hot money, or what some people also talk about, unusual option activity. My way of finding hot money is different. Unusual option activity is interesting, but it's not that useful. So, we're going to talk about some that came across on the hot money scanner, and I'm going to show you understanding how to follow that flow, creating a watch list, and how to do it strategically. So we're going to look here at WestRock shares here. We're looking at the chart. And the thing to keep an eye on is I'm going to move this over here. So right here, we had this earnings event Monday. I'm going to show you exactly what happened on Monday, why it was on my radar here. But we had to move lower here after the reaction, rebounded, even though they missed on earnings, and then hits a new high here. So that's a lot of volatility. But the thing to keep in mind here is that this is volatility here, and we see when volatility, if you're long options and it's going, volatility goes this way, that's not good. That means whatever you paid previously is much lower because volatility has gone against you. So we're going to take a look here on the Analyze tab, and we're going to look previously at the activity that was on Monday here. So it's always good to know, especially in earnings season, and this is how to be strategic with options, is following the order flow, understanding where money's being positioned. And you can see here that money, or well, you can see what I'm pointing to here, is that the volume here was 1,500 contracts, exceeding an open interest of 5,000 contracts. Well, these were being bought. They came in and paid $1.15 for these. I have no idea why, but they came in, bought $1.15 ahead of earnings. Now, I did jump into these. And again, rule number one, we talked about in another video, is never hold through earnings. But one of the things to keep in mind here is what is being positioned ahead of earnings, because what people tell you is that smart money is smart money. Well, smart money can be smart, doesn't mean they're smart on how they approach the marketplace. And options are very complicated for the vast majority, and even professionals. So smart money doesn't necessarily always know how to strategically play within the options market. They make their bets because they think something's going to happen. They could be right, only to see that that bet didn't pay out. So you have a thesis, and you have to have strategy on how you implement that in the options market. So here we had buyers come in here. Now, some of them did actually exit the following day. We did get a push higher here on the chart. Well, back here, we did get a push higher here. And then we kind of pulled back down. This is when the market had sold off quickly here. So this could have been anticipation bet going into this event here, and it completely went against. It sold off with the marketplace here. But keeping in mind in that option positioning, even though it didn't pan out right away, they were positioned here, and that they were looking for a reaction higher. Now, maybe that initial reaction wasn't what they expected, and that was a shakeout. But what they assumed would happen is that prices would trade higher here. So oftentimes, it is better to trade stock than it is to trade options, especially in earnings. But the thing I want to point out here is that if you would have understood how to trade these options, you would have been able to buy those on the dip there as the implosion happened on the premium. And as you started to see that buying come into the stock and look, and maybe the trigger was to break the previous high here or break the previous close, that could have been your signal. This is creating a watch list. Trading is not easy. There's a lot of things that go into it. There's a lot of things that happen, and you have to keep a watch list. You have to keep triggers. This could have been one of those triggers, but this is the right way of trading earnings, understanding order flow, and waiting till after the fact. Another one I want to point out as well. I want to point out two trades, keeping that in mind of understanding, keeping that order flow, not chasing that order flow into earnings, waiting for it to pan out, and then to get in afterwards if the momentum is shifting in that direction. So late day today, VT RS is one. And the option activity in this one was focused very heavily in the June contract. Now, that does have time to expire. And because it has, as we kind of scroll down here, has 43 days to expiration, the crush and volatility, the crush in this contract is not going to be as extreme compared to the months closer to expiration. So there's still some time on this one, 43 days. There will be some volatility crush that happens here, but they're coming in 5,000 contracts traded here, and earnings on this one are before market open on Monday. So if you got in today, you have Friday tomorrow for this to pan out. If not, Monday comes along and who knows, you're trapped. You're trapped like a rat. So this is one that you would want to keep an eye out for after the reaction, Monday morning. Put this on a watch list, watch it. Then if you look to jump into those June calls, then you can look to do that because that's when the volatility will come out of those. The other one that interesting that came in, late day, sometimes it's kind of, it shakes your head here. You shake your head, I shake my head, is, so 5-6 here. So we have earnings on the aftermarket close here. So today on GoPro, they're coming in and they're coming in pretty aggressively buying these contracts that expire tomorrow. Why? Who knows? But they're also coming in as well into some of these other contracts as well on the 10 contract here in May that expires in 15 days. And the big interesting activity was here in the the weekly expiration on the June 4th expiration, which is 29 days. This was the one that stood out here, and this is where they're coming in and buying here at the 11 strike. Now, again, this is something that comes out, and tomorrow put it on a watch list. Keep an eye on it for a potential move higher here. So they did have earnings, and it looks to be closed at 10:44. It's 11:15, 11:18 here. So it's above that $11 strike there. We look at the chart here at $11. We're just going to put it right back into these moving averages here, so we'll have to see how it moves, how it reacts off of there. But this is how to play, how to trade strategically, not jumping in ahead. Wait for that premium to come in a bit, and then if the reaction is what it was anticipated, get it at a better price, follow along that activity, and that's how you be more strategic. So make sure you like the video below. Make sure you share it with a friend. Make sure you leave a comment. Make sure you clap 3 times. Spin around. I'll see you in the next one.